Hi, I'm Pattu from freefincal. Today, let's talk about the AUM growth of Parikh Flexi Cap Fund, which was earlier known as the Multi Cap Fund, a long-term equity fund. This fund's AUM has grown by 147% in 2020. Of course, this is not a singular event. Several funds AUM has swelled up, and this increase in AUM has got two components. One is the inflow into the fund, that is new money coming in via new investors or existing investors, and the capital appreciation of the existing funds in the fund's portfolio, existing stocks in the portfolio. So somebody asked me if we can quantitatively assess the impact of high AUM or the sudden increase in AUM. This is very hard to do. And I had earlier talked about the case of HDFC Top 100 and HDFC Equity and what happened to these funds when the market recovered after the 2008 crash. There was a sudden and large influx into both these funds. In fact, all of Prashant Jain's funds in particular. And what happened was the funds earlier it had an ability to freely move across market cap, but because of the large increase in, especially a sudden large increase in AUM, the funds gradually became large cap oriented, and the churn ratio, or how frequently the fund manager churns the portfolio, that frequency reduced quite dramatically with increase in AUM. In fact, very few funds have managed to maintain outperformance in spite of large AUM. Of course, for these funds, I don't think the AUM, there was a sudden increase like it happened to HDFC Top 100 and HDFC Equity. Those examples are, the well-known examples are ICICI Blue Chip. Somehow they managed to do well. And I think Kotak Multicap, now it's also called Flexi Cap. This large increase in AUM after investors see a performance is very typical. That's how investors behave. There's always some kind of herding mentality. This reminds me of that famous dialogue in Matrix spoken by Agent Smith of how human beings resemble a virus. They go there, multiply until that particular resource gets consumed and so on. That's how investors behave. So first they have to see performance, then they will go and put money in that fund, and when more and more people put money in that fund, then performance could decrease. But nobody can tell quantitatively whether the performance actually decreased only because of the higher AUM. All one can do is speculate. It's a bit like high PE in the market, right? People say, oh, the PE is very high, the stock market is going to crash and so on. It's not like the market will crash because the PE is high. That doesn't work like that. So it's very difficult to quantitatively analyze, but intuitively we can make a few guesses here and there, like I've just done. That's all. For the Parikh fund, the AUM is only about 6,000 to 7,000 crores. I don't think it's a big issue on an absolute level. How much it quickly increases will be something that we will have to wait and see. What investors can do is to check the number of stocks in the portfolio. That will increase when the AUM increases because the fund manager will have run out of options. The churn rate will reduce. The fund will tend to have more of large caps. These are typical patterns of funds whose AUM has grown. The good news is that Parikh is not, the AMC does not have a bank. So the AUM will not suddenly increase like it has done. I have a post subsequent to this. For example, Kotak floating rate fund, I think that fund has got an enormous increase in AUM, and that cannot happen if for an AMC without a bank. It's because of the RMs who push quite rigorously. It's very unlikely to happen. So I have also looked at the AMFI data for the direct plan and regular plan share. And before we do that, this 147% growth of AUM for this fund is the 36th highest increase out of 399 funds. So it's not a singular event. Other AMCs have also seen an increase in inflows. So what was 2,585 crores in December 2019 has become 6,393 crores in December 2020, and 71.6% in the last quarter of 2019 was in direct plan. Now that has slightly changed. It has dropped down to 69.5% in direct plan. So the distributors have also started pushing the the regular plan noticeably. So the regular AUM grew by 147% and the direct AUM grew only by 123%. This is the average AUM per quarter as given in the AMFI database. Actually, the increase in the regular AUM for the Parikh tax saver fund is much higher than this. Of course, that fund has just hit 100 crores. On an absolute level, it's that increase is not such a significant thing because the base AUM itself is small. Other than that, I wanted to show you this graph. This is the NAV and AUM growth, normalized NAV and AUM growth. You can see how much the inflow has increased into the fund, and we can also estimate the actual inflow. So you can actually find out the percentage change in the NAV and the percentage change in the AUM, and the difference between the two gives you the estimated inflow into the fund. So you are removing the capital gains component and you are just estimating the inflow. And since March 2020, the NAV of the fund has increased by 68%. The AUM has increased by 161%. So if you subtract the two, the inflow, that is additional cash that has come into the fund, is about 93%. So the AUM has actually doubled after the market crash. So that's why investors have got a bit jittery about it, which is natural. So this is the 6-month change in the AUM. The blue line is the blue dot, 6 months change in AUM. The green dots, the 6 months change in the NAV. You can see both of them reacting to the crash. If you actually subtract the two, then one from the other, then you will be able to get the 6 months change in the inflow. And you can see that's a lot more smoother, and you can see how the inflow has rapidly increased in the last 7-8 months since the time of the crash. It has kept going up. There's not much one can do about this, and I don't think the AUM levels are alarmingly high, but it is a curse of a performer. See, people want performance. All they want is that, and they keep chasing after performance. And if too many people chase after performance, eventually, because of the law of averages and maybe not because of the AUM, the performance will at some point drop and people will start cribbing and so on. That's going to happen to this fund also. When it's something that nobody can predict. But since the fund does not have a bank bank distribution network, it will take at least a couple of years, I hope, before the AUM becomes too high too large for the fund manager. And also, if there are other funds which perform better than this, then obviously people will go to that and so on. That's how investors are also are going to behave. And again, there is about 20-25% US exposure. I don't know the exact numbers. Again, if the US market crashes, this fund is going to have is going to face some dip in performance and so on. So all these are eventualities, and investors should prepare for that.